How to thrive after the next market crash. 6 effective ways. There are a lot of inevitable things that'll happen in our lives. If we talk about business, a market crash is one of those. So, better not relax and prepare yourself as early as now. Because I'm gonna tell you, I've already seen a lot of people that got totally blindsided by it. That's the reason I want to share this with you. But before that, don't forget to click that subscribe button. This is Finance Boss, an awesome channel for awesome people like you. Without further ado, let's start. Number 1 is to first have an emergency fund. An emergency fund is a savings account where you set aside enough money to cover you for at least 3 months worth of living in. The point of an emergency fund is not to have to dip into your retirement accounts or go into debt. I mean, just think about what happened in 2021. Millions of people got laid off if they had no safety net, no cash set aside. Number 2, have an investment fund. Investment fund is extra uninvested money that you have sitting in your IRAs or investment accounts or some other account. This is money you use to take advantage of a market crash. As soon as it happens, this is totally optional. Definitely nowhere near as important as having an emergency. But if you do have some extra cash, when the market's crashing, a lot of stocks go on sale. And the only way to benefit from that is if you have some extra cash to deploy. For example, back in March 2020, when coronavirus was blowing up and the markets were pretty much in free fall, I had about $5,000 sitting in my Roth IRA as uninvested money. And that was kind of my market opportunity fund. I was able to use it to buy some more index funds, not exactly at the lows. I didn't catch the market bottom, which is hard to do. But I did get in at about 20% cheaper than the highs. Be robotic with your investing. In the words of Warren Buffett, we don't have to be smarter than them. We just have to be more disciplined than the rest. And the best way to be disciplined about anything is to automate it as much as possible. If the price of groceries were to crash, everyone would be loading up in the store while things are cheap. But when the market crashes, everybody wants to run out of the door and sell it instead of buy. That's just human nature because humans are irrational. We're emotional beings. We all know that we should buy low and sell high. And it's easy to look at a historical chart and say, oh, I would have bought here and sold there. But hindsight is 2021 when the market crash is actually happening to you. It will always feel like it's too late to sell and too early to buy. It takes a lot of guts to invest when the market is crashing, and even the smartest investor might talk themselves out of it. That's why I think you should set up a monthly investment of say $200 on the first of every month and just let it run in the background, rain or shine. If you put this in place now, before the next market crash, you'll benefit by scooping up a bunch of stocks, all without lifting a finger. This automated robotic way of investing is known as dollar cost averaging. If your investing is all automated, you don't have to look at your tongue all the time. The more often you look at how your portfolio is doing during a market crash, the more you're tempted you'll be able to sell everything and go to cash because it's just too scary to look at. So that's a terrible idea, obviously, because if the market rebounds 9% the very next day, which is exactly what happened in March 2021, by the way, right after a 9% down day, you're going to be kicking yourself. So rather than dealing with all these convoluted emotions, just be disciplined, automate, and invest like a robot. Number 4, create multiple income streams. If there's anything we learned from the pandemic, it's that you can't rely on your job, or basically that life is so unpredictable. I mean, who would have imagined in their wildest dreams that entire cruise ships would be sitting empty and entire industries would be coming? Like would shut down airlines and restaurants. And when a market crash occurs, it's usually because the economy is falling apart at the same time. This means that job layoffs tend to happen a lot more, right? When people are under the most financial strain, the hardest hit industries this time were obviously hospitality and travel. And most people whose only source of income was in these industries lost pretty much all of their income. That's why if you want to be prepared for anything, you want to diversify your income streams. For example, let's say you're a restaurant worker who got laid off during the pandemic, but you also had a side gig doing freelance. I don't know, photography or graphic design, you would have lost your main source of income as a restaurant. So you just never know which industry will be impacted, and it could be yours. If you have all your eggs in one basket, all in one industry, in one job, you're very vulnerable. If you diversify your eggs in different baskets and have multiple income streams, you're going to be much more. Also, trying to build at least one income stream that you can do online from home, so that if a lockdown or something like that happens again, you can still have some money coming in. You want to start this early because it takes time to build up reliable income streams. It does mean you might have to learn some new skills, invest some time and effort upfront, but in this day and age, with things changing so fast, I think having multiple income streams is an absolute must. Number 5. Diversify your investments. Instead of putting all your money into just 1 or 2 stocks, put your money into 10 or more stocks. An easy way to diversify your investments is to simply buy an index fund such as FSKX if you're with Fidelity or VTSAX if you're with Vanguard. You know, a total market stock index fund is a type of mutual fund or exchange-traded fund whose holdings mirror that of a particular index. They tend to hold hundreds and sometimes even thousands of different stocks, and only one of these. It's like owning a piece of the entire economy because the economy is made up of a lot of businesses, right? So, if you own an index fund that has all the company stocks in it, that's like owning a piece of the economy. This is much safer than putting all your money into one stock that you don't know much about. Of course, if you know a lot about that stock, that's a different story. But most people aren't able to do that as an extreme scenario. Imagine you had all your money in one airline stock, such as American Airlines, and then the market crashed. So at least in early 2020, you would have been down almost 70% from the beginning of the year. Whereas, if you had all your money in a diversified index fund, such as an S&P 500 fund, since the S&P 500 contained many different indices, including industries that actually benefited from the crisis, to just tech stocks, then you would have been much better off in addition to diversifying within stocks. You can also diversify into other asset classes as well. Instead of holding all your money in just stocks, consider adding some bonds, some real estate, and other assets. Once again, you can do this pretty easily by buying a bond index fund or a real estate index fund. All of these will hold a different mix of that. Number 6, and our last one, pay down your debts. While you can still count on reliable income, having no debt might not be realistic, but have as little as possible, and you'll be in a much stronger position to survive. Think about airlines. It's a capital-intensive business, and airlines often borrowed tons of money to fund their equipment, airplanes, and operations. So when the coronavirus hit, their revenue basically went to zero. Yet, they still had all these huge lease payments to pay for their aircraft, loan payments to make, etc. If it weren't for the government bailouts of, no one knows when the next market crash will happen or how bad it will be. Or who knows, maybe during the posting of this video, the market's already crushing, but true. And security doesn't come from actually knowing the future. It comes from being prepared. No matter what the future holds, in a world of so much uncertainty, you can still have a lot of surgery. Now, it can still be scary, but you can lessen the burden now. You can always make use of your time by planning what you'll do and doing what you have planned to do. Yes, it can be scary, but at least you're prepared now. So that's the 6 effective ways on how to thrive in the next market crash. If you learned something new from this video, comment down below what it is. Also, don't forget to subscribe. It'll help us big time. Thank you so much for watching. This is Finance Boss, an awesome channel for awesome people like you.